Hi, welcome to the Investment Blueprint. I'm your host, Raghu Kumar from Rain Technologies. The Investment Blueprint is a weekly podcast where you can find me interviewing real-world quantitative traders and investors, hedge fund managers, and industry experts in the field of quantitative, data-driven trading and investing. My goal is simple. I want to help you make more consistent, profitable trading decisions in a data-driven and meaningful manner. Today's topic is on how to do algorithmic trading in India, with the focus on the evolution of algorithmic trading in the country. I interview Vivek Gadodia from Dravyaniti Consulting, and also the founder of Algo Convention, a very popular annual conference dedicated towards algorithmic trading. Vivek is a self-taught algorithmic trader who has kind of seen the entire shift from A to Z when it comes to India's algorithmic trading markets. I first met Vivek when I moved to India in 2009 to set up RKSV. At the time, I didn't have my own brokerage license, so I executed RKSV's trades through other brokerages. And one of them was Phillips Capital, where Vivek worked at. Out of the entire staff at Phillips, I vividly remember Vivek being the most curious one when it came to our activities, as we would spend our entire days at their office. He had a lot of questions regarding our low latency trading algorithms, and I knew that he and I would be involved in this space for a very long time. Fast forward 12 years, and Vivek is now successfully doing all sorts of things with algorithmic trading. So I knew I had to interview him. Today, we talk about many topics: how he got into trading, how he pivoted into algorithmic trading, and we'll also talk about the changing landscape for algorithmic trading in India. Hopefully, you can walk away with a bit more clarity into where things stand today with algorithmic trading in India. So, Vivek, welcome to the podcast.
Hey, thanks, Raghu. Thanks for having me here, and great to see you again.
Fantastic. So, there's many different ways I can take this conversation, but let's kind of start with your just general background to trading. How'd you get started?
Yeah, so I kind of remember the earliest days where I was working with CMC Limited as an analyst programmer, just fresh out of business school, and that's where I worked on treasury software, and I got kind of exposed to Euro USD. I had kind of not didn't have much idea any idea back then, and I just saw those charts moving and kind of got a little more curious about what it is. I tried my hand at a little bit of simulated trading there, and then I kind of started doing a little bit of stocks because that back then everyone in the company used to kind of put money into some IPOs that were coming back then with whatever little money I had from my salary. I took a bet on few stocks. I remember Bank of Maharashtra was one of the IPO. It's at 32 rupees, I think. So I kind of subscribed to that, got some shares, and then kind of kept trading stocks in and out. So I would just buy stocks, and luckily the market was kind of going up in 2003 to 2007. You remember there's this huge bull market. Like bull market is where like the stocks just go up, like what we are seeing recently, somewhat
Right.
maybe in some of the small caps and the mid caps. So I would just get in and out of stocks, and luckily made some money on that.
Nice. So, I read an article of yours, I think it's from Money Control, where you kind of talked about how you got into money management, right? And you started, managing the money of family and friends. How did you make that switch, from trading your own money to kind of getting into, dealing with family and friends?
Yeah, so Raghu, actually, I didn't have obviously much capital then, right? So and I was lucky enough to, I think, work at MF Global back then, where we connected, and I mean it was very early days in Algo, if we would say, in India at least, and I was lucky to kind of work with you guys who actually had the experience of running a quant shop in the West, right? And you were running that here, so it was like uh, for a lot of us out there, right? Not just me. I mean, even a lot of the experienced people, it was very new. It's
Yeah.
just like something. Hey, this is some kind of magic wand or something, or what is it, right? And it made a lot of sense for everyone actually, including the broker, right? Including the firm, including you guys, and I was then got in touch with one another trader after I kind of left MF. I started out working as a consultant doing algo development projects for some traders. And one of the trader, he had an idea, but he didn't have the skills to backtest it, like go back in time and see how that strategy would have done, right? And I had a little bit idea on backtesting, but not that much in trading, right? Using technical analysis. So he was using technical analysis.
Okay.
And that's when we collaborated. We downloaded a software called Ninja Trader, which is free. We luckily took some data from eSignal. It's one of the software, and
Yep.
we ran this backtest, and it was a 3-year data that we had. So this was in somewhere in the middle of 2012, so 2009 to 2012, and it showed interesting results. I mean,
Yeah.
that's the whole amazing thing, right? Because we keep
When you first see the
hearing,
amazing results, that's when you get really excited. Yeah.
and we hear so many things, right? And from so many people, and
Right.
end of the day, it's like whatever the data tells us is the truth, right?
Right.
I mean, for a point. So then, luckily, there was a gentleman who was introduced through somebody. He said, "Okay, I'll put up 10 lakh rupees on this," right? Like he was kind of sold, and that's where it just started.
Got it. So in that same article, the same money control article, it also talks about how you built algorithms for a U.S. Crowdsourced hedge fund.
Yeah.
So I'm going to guess that's Quantopian.
Yeah.
Right. Okay. Because it didn't mention that. And so how did that happen? And what was that experience like?
Yeah. So luckily, I was working with an intern at our firm, and he started to continue to want to get into build algos further. And I told him, why don't you we check this out. So he kind of started to build a little bit of an idea there. And it was a long short strategy what we're building. So by long short, we mean equal amount of stocks long and equal amount of stocks short, right? So
Right.
that at all points of time, so that if there's something that happens in the market, like say the market opens gap down 5% tomorrow, right? And we are holding long stocks, right? We've bought stocks. Obviously, it's going to lose money, right? And if we are also short some stocks, right? Then at least on those stocks we could make some money or not lose as much. Maybe they just even remain where they are or something. Or
Right.
usually they will also. It's very rare that all stocks long will go down and all stocks short would go up if we have a well diversified sort of larger number of stocks, at least about 10
Right.
15 stocks. And we started to I came in with some ideas on how to build the portfolio, how to manage risk, and how to kind of make sure that it's kind of tending to generate consistent returns.
Got it.
So that happened, and luckily that kind of got selected in the top 3 ideas out of
Wow.
672 ideas submitted worldwide. I think it was a lot of work by the colleague, and a little bit of help from in what I put up in shaping the portfolio and the risk. And then I think we got lucky. So I think in the quant world, I mean, we got to keep doing a lot of work, But end of the day, it's you would know more than a lot of people that luck plays a lot of role in.
Sure. Absolutely. So, one question I had with that, right? I mean, when you go from, the Indian landscape to now building strategies for the US in that situation, what similarities and differences did you see between building strategies for India versus the US?
So the US is obviously we've seen a much larger market. It's got a lot of like algo trading here is still say 10-12 years old, but in the US it started in the say late 80s, early 90s, where
Right.
really computing power started kind of increasing a lot, and people could easily like whatever we did with Ninja Trader back then is something what anyone with very limited resources could also have done in the US in the early 90s when computing power started really going up. And obviously there are a lot more algorithmic traders there, and there is probably a lot of more competition.
Yeah.
But what I think I've seen is in the very shorter time frame, you have to either do some high frequency kind of low latency stuff, which is a domain with very few people who specialize in that. Like
Right.
it's not very easy to kind of make money in that area because there's a lot of competition from traders who have a lot of infrastructure and resources
Right.
versus probably something like where you trade on little higher time frames, like your trades are less when you may be doing daily a few hourly candles or daily or weekly data. That's where I think there are still a lot of opportunities for individuals or retail traders in the
100%.
US.
Yeah.
But I'm sure you would have a lot more experience actually having traded very actively
So
in the
I
US.
personally have not really traded US equities very much, but I would definitely attest to everything you said. Because I think generally when you want to get started and you want to kind of just get your hands dirty and build something for the US, it's just much easier. There's just much more out there that's available in terms of resources and things like that. And just, when you're dealing with a number of products that are liquid, it's not just equities.
Yeah.
You have derivatives and, commodities and currencies. And, when you deal with, say, stock futures, right? In India, generally, when you're trading stock futures at the intraday level, you start thinking about spreads a lot, right? In the
Right.
US, that's not the case, right? And same thing with, stock options and things like that. So a lot more products to trade with, but there's a lot more competition.
Yeah.
So that's something you have to kind of deal with in the US. So I think it's interesting if you can build strategies for both markets, then you kind of get a good understanding of the entire space. But I wanted to kind of ask you, so now you're trading and you're kind of, dealing with friends and family, and you're kind of doing some stuff with fund management. How did you start Draviyaniti? And also on that line, how did you get the idea for the Algo Convention?
Okay. So Dravyaniti happened like where
And also, sorry to cut you off here, but how'd you come up with the name Draviyaniti? Because it's
oh,
such an interesting
okay.
name. Yeah.
It started with actually one or two of our early clients, right? Who kind of got excited about what we are doing. I think one of my partner, co-founder Devang, he was also handling algo risk at Edelweiss, and he kind of got interested, and he saw kind of what we are doing. So we said, why don't we come together and kind of give it a little more formal structure? Because end of the day, we realized like while doing it for individuals or a smaller group of people is okay, but the moment you're trying to like scale it up to a larger number of clients who are external clients who may not be just friends and family, or like people who don't really who you don't know, and trying to run larger sums of money, then there is a lot of a lot of shift in terms of how, just from strategy, we got to kind of look at more about like process, and more about like reporting and communication with clients, and there are so many things. So I kind of realized that it's not going to work if it's like a one stop shop, one man show, or like doing it alone is just not possible, is not kind of possible. And you needed to get like-minded people, so we got together and started to give it a little more shape. The name, actually, interestingly, was there was another guy who said, so Dravya means wealth, right, in Sanskrit, and Niti is effectively strategy or ethics, right? Like, so we said
Oh, interesting. Okay.
we want to also do this, but with trying to do this as clearly as possible.
Strategic wealth building. Yeah.
Right, right, and yeah, there were thoughts like, hey, it doesn't have maybe a totally Western thing to it, but we're like, okay, let's go ahead with it.
Sure. Yeah. That's amazing. And what about Algo Convention? How did that
Algo
happen?
Convention is actually interestingly, we were waiting on a meeting actually for to meet a hedge fund manager actually from the US who had come down to India. He's a friend. We were waiting for him. He was running through a meeting with somebody, and a large investor, and that got extended. So while sitting there, and we said, hey, let's do something. It's like a conference, right? Where, because the biggest thing in this space is that we've seen is education and awareness about what we are doing, right? So like in equity, it's very simple, relatively, where you buy stock. If the market goes up, you make money. If market falls, you lose. But the space we are in is requires a lot more understanding of some complexity of products, especially like you said, when we move from futures to options and other things.
Yeah.
So we thought the right education is the right way to kind of maybe do our little bit in helping to grow the ecosystem, and make people aware, possibly to some extent bring in experts like from industry, like guys like you who have traded actually markets, right, or done quant stuff, and share their real world experiences, rather than just having a sales pitch like, hey, I come on a conference and I'm like selling my product or something, right? I
Right.
mean,
No, and
and
it's a huge way to go, right? Because if you look at, just a number of, within India, right? If you look at the population and the percentage of the population that invest in the stock markets, it's still in the single digits, right? And then out of those guys, the guys who are even aware of algorithmic trading is going to be a small percentage. And then out of those guys, the percentage who actually take the plunge and go through all those hoops, open up an API trading account, do all those things, it's going to be a very small percentage, right? So you're talking about a huge number of people. And in India, I think culturally we are very well adept at thinking about things in a very objective, quantifiable manner, right? I mean, we are the India is the world for IT and the world for math and all that, right? Or the country that produced a lot of that. So I think it's really also kind of in our blood a little bit,
right.
to kind of think about things in a systematic manner. And obviously, conferences like Algo Convention go a long way in kind of helping propel that. So I wanted to kind of ask you another question here. So obviously, I met you, 12 years ago, and it's been a long time. So in those 12 years, right, what are some general trends you've seen when it comes to this whole algorithmic trading space? What are some, encouraging trends, and maybe even some, discouraging trends as well?
Yeah, that's a very very interesting question actually. So I think we've seen the earlier years, we could run some more simpler trend following systems, because the trends on the markets were probably likely to persist much long, more, let's say, more percentage of the time, relative to now. Like there would be trends, like maybe 35%, 35% of time, versus now we've seen possibly those trends may be just 20-25% of time. And the remaining time, it's basically going to be non-trending, counter trending, or mean reverting, as they say, right?
Okay.
So strategies which worked back then don't exactly work the same way now. So that's some kind of a shift, and I think a lot of shift we are also seeing is because of the weekly options coming in
Right.
2016, and that's kind of changed the texture of the market to like from being like a, there's like a game being played every week, right?
Yeah.
With very very large players who kind of have bets for the week. And in the US, I believe there are like daily options also.
Yeah.
And so that does bring in some changes in the, I think at microstructure level. And the good thing is also with spread margins, yeah, it's possibly going to has brought a lot of interest in options.
So do you think the introduction of the weeklies is what has caused that shift? That 35% to 25%?
It's probably accelerated that. It's probably
Okay.
accelerated that. It's
Got it.
probably. And
Do you think there's
and
any other reasons? Like,
uh,
I'm not sure. Like because of more participation or
yeah,
anything?
yeah,
Yeah.
that's also definitely there, because
Yeah.
India, like you would remember those ways back then where we used to talk, and we were like, hey, it'll take time in India, and
Yeah.
probably like, but eh, like you said, in the way it's the root, of like IT and math skills. And once Indians pick up something, then they technology driven, they like it. They just latch on to it, right?
You're right.
So
It's like, yeah, it's like that's mine. Exactly. 100%. Right. And it's kind of like the low hanging fruit, right? You have low hanging fruit, and once it's available, people just grab onto it, and that's inevitable. And one thing I've also noticed generally is, you take strategies which have kind of worked in the U.S., right, and then they kind of make their way to India, right, and then and it's not because it's a U.S. India thing. It's more like you said, right? Things just happened in the U.S. before India, right? When it comes to the evolution of the electronic trading markets, right? Things opened up more quickly in the U.S. versus India, and so some of these ideas, even like arbitrage plays and things like that, right? They quickly, get latched onto, and then before you know it, the edge is gone, right?
right.
So I would totally agree with you on that. Um, so, you've been trading for a long time, right? What are some mistakes that you have made along your journey? Because referencing that same Money Control article, also talks about the fact that you have kind of, burnt your fingers a little bit, right?
Oh, I
We
would
all
say,
have.
I would say a lot. Yeah. So there are a lot of mistakes. I think the only learnings, if any, in this have happened through the phases where mistakes are made, right? And that's one of the thing about this, I think, is that when you're making money, generally you tend to not learn, and you don't go into detail like so much of why you're making that money, versus obviously when you lose, you would tend to want to go back and that's, I think, the only difference between a good trader and a bad trader is who kind of doesn't want to learn from mistakes, right? That's like probably going to remain like a bad trader, right? And like if you're making mistakes is fine. I completely remember this from actually you guys, right? Like when you were trading, then we used to talk, and so I always remember, like you're like it's okay, right? But like you don't want to make the same mistake again, right?
Right.
And you obviously make sure it's not that big enough that sets you back totally, but like you learn from that. So yeah, I've kind of made mistakes on position sizing a lot, which was very underrated. It still is very underrated. We mostly everyone's talking about strategy, right, and entry and
Right.
exit rules, but there are so many dynamics that a whole bet size can do to even make a bad bet sizing can make a good algo bad, and like good
Right.
bet sizing could make a moderate algo okay,
Much
or
better.
even good, much
Right.
better. So a
The
lot of
only
mistakes.
thing that bet sizing cannot do is, in my opinion, it cannot make a bad algorithm good, right? Everything else can be done, right?
Right. And then try to sometimes pick up algo strategies from somebody without really understanding or going deep into it, and trying to just run it. But I realized still, we don't have the belief in that kind of thing. It's very difficult to stick to it during losing phases. So end of the day, I think these have been some mistakes. Trying to override the system, trying to kind of play hero, or have a view and not change it. I mean, there's a long list. I think the whole
Sure.
podcast duration would get quadrupled if I keep talking. But this is really where I think the whole team aspect comes in, and where
100%. Yeah.
the guys executing their job is they should have the ownership, actually, to override even the strategy creator for whatever he or she is. Once the signal is generated, it's ownership of that team to execute it, right? And the strategy generator's job is just to kind of keep researching.
Sure. Yeah. So one thing I would say to that is, I think that's also a function of your team. Like if you have a team to work with, right? But for those who are listening to this and they're kind of like lone rangers, just doing their own thing, right? Obviously, psychology is a big part of trading, right? And kind of controlling your psyche and like you said, right, not overriding your system and things like that. So, psychologically, how do you kind of stay alert and grounded? And maybe not today so much, since you have a team and stuff, but I mean, also for today, but also in the past, right? And it's generally, for someone listening to this who wants to build their own strategies, right? And they're dealing with those issues of kind of letting their emotions getting into the picture and things like that. What are some tips you have for them, to kind of override that?
Yeah, so I think the very early portion when I just started out running this professionally for that gentleman. I know that was that 6 month phase where I was a lone ranger back then, and when I started running that, luckily I think for me, I kind of put in a lot of discipline in executing the system as is and shutting out a lot of the noise around that. So for a system, if my if and for everyone who's kind of listening and who's trying to get into this, hopefully if this helps, if you get a buy signal on your system A, right, that is like the only thing you should kind of look at, and everything else around that is noise probably for that. So you buy, and then, like, if you get an exit, you exit. And doing this for about 6 months, I saw that there's a complete shift in like what I was doing manually versus systematically. Because in manually, I was probably right 5-6 times out of 10, which is still in the system. I was right only 4 times out of 10. But the biggest problem was that in manual trading, non-systematic, I was losing more than what I was winning on average on the winning trades, right? And like I was holding on to the losers more longer than I would hold on to winners, right? And to completely like rewire myself, and just sticking to the system and seeing the ups and downs, and not tending to intervene. Like, so that early stage really helped a lot, right? And that helped bring in a lot of new clients as well. And later over the period, I realized that it's maybe like a different challenge now, that I would still tend to want to at times um, feel the need to override. So what I do is, actually, I made a cheat sheet. I do a
Okay.
very small account, right, where I kind of do what I want to do, right, and let the majority of the money run on the system. And this is a tip I think I read from one trader. So that
Okay.
I've just tried to like bottle myself up and not do anything is not possible for me.
Sure.
So,
So you
like,
give yourself the free hand of doing something in a
right,
discretionary manner,
right,
right?
right.
Got it.
But I know, like, that portion is just there to help me, emote out, or just
Yeah.
just get out what I want
Out
out
of
of my system.
curiosity, how does that portfolio compared to
it never is able to beat my system. Never.
yeah, yeah,
Like till date. Okay. I mean, and maybe that's what is good for us as quant traders. But
sure.
so I know that I mean, and I'm happy to at times eventually let the system, make money, because that's what's making wealth for clients and for us eventually, right? So yeah,
Yeah,
I would say.
that's amazing. Yeah. So, another question I had was, obviously this is for our listeners, right? What are some good resources for quants who want to kind of learn online, apart from Algo Convention? Obviously that's there, and that's going to be in our show notes and things like that. But apart from the annual conference, that you guys host, what are some good online resources for quants in India?
So there's a lot of material one could kind of see, just Google on strategy, and land up on YouTube. But I think particularly there is Quantra is a good source of some free kind of video lessons and some Python code as well, where like you can just kind of try out some moving average crossover strategies, or like some breakout strategies. With That's kind of the best way to, I think, learn, is where actually that's where a lot of people are just reading about strategy but not kind of going into that stage of actually testing it out and seeing the results, right?
Actually
And
doing it, right?
yeah,
Yeah.
actually doing it, and
Yeah.
that's the real thing here, right? Like, because
Sure.
unfortunately we are not selling any research report, or we are not kind of it's like you have to make hardcore money from your money, right? At the end of the day, you want to see what works and what doesn't work. So
Right.
trying those things out from Quantra is a good source. There is
Quantra, so Q
yeah,
U
Quantra.
A N
So
T R
that's
A.
Quantra,
Okay.
right? And they also offer a platform called Blue Shift now, which is like open source, where one could use some Python code, and they have data sets ready now. Big challenge in our area is also to get the data right, like to
Right.
clean it and have quality data there we can do meaningful analysis, which for all beginners is a big hurdle in terms of cost and time also, right? So these are tools who have got this ready, and you can just like at least try out some basic ideas and see how they work on. In fact, interesting, they have US data sets also, US and India,
Okay.
and some forex data sets. And I think then there's also these kind of podcast, actually what you're doing, right?
Hmm. Sure.
Like traders, a lot of traders have actually learned from other traders and got inspired, right? Like
100%. Yeah.
in Market Wizards, also
Yeah.
they've always said so. Each one draws his own inspiration from somebody, and
Somebody else. Yeah. Which is kind of ironic, right? Because trading is generally a kind of a lonely profession, is what I always tell people. It's a weird thing, right? Where it's by design, you're kind of just by yourself. And
yeah,
it's also one of those things where you feel like, oh, well, because I have a secret, I don't want to share with other people. But the reality is, you need to be engaged with other people because the markets are always
yeah,
shifting and evolving. So something which
exactly.
works today is guaranteed not going to work at some point in the future, right?
Yeah, and a
So
lot
you
of
have to
people,
be, yeah,
right? Absolutely, a lot of people just like really overrate the strategy idea. Hey, like I've got this idea in which I think is
the holy
everything. But
grail.
yeah,
Yeah,
but that's like one thing, right? There is like that's probably like the iceberg where you see the idea on the top 10%, and 90%, which is like you said, psychology,
right,
running that with consistently, evolving, learning, talking to other traders, and
right.
ironically, like you exactly said, ironically, there, if you really want help, right, and you want to do well in this field, the world and the universe will come to help you. that
100%.
that's that's the best part about this also, is that there are tons of resources, tons of traders willing to share their idea, because they've been in that game and they realize it's how difficult it is in the end also. So in a way, they
Exactly.
really appreciate people who want to kind of also try it, right? So
100%. Yeah. I mean, you have to be smart. At the end of the day, you don't want to give away your edge and your
right,
secrets. But as long as you
right,
know what not to talk about, then if you're just kind of open and you're willing to share information, like you said, things come back to you. And and it's pretty amazing like that. Last question for you, Vivek. What are your personal goals, when it comes to trading, and your professional goals, when it comes to Draviyaniti and Algo Convention and things like that?
Yes. So I think wanting to kind of professionally make this into AUM of probably 5 to 10x of what we are doing at least in the next 2 to 3 years, and maybe
Okay.
in the 5 to 10 years to see where it goes from there. And hopefully, if it starts doing well and clients are happy, then it probably returns speak for themselves. It's the only
Yep.
thing which when eventually is the best judge of us. So we would like to be judged by that, and hopefully keep doing better. And I think I would want to kind of obviously get better and better at trading. So keep learning. Right? It's like there is every single day where there is something that we would be learning, and that's, I think, going to remain till the time we kind of hit the grave, like I hit the grave. So like keep learning always and keep improvising. That's
100%. I love that. I love that answer. And I think, you have to be curious. You have to be willing to learn. You have to be willing to learn. I think that's the most important thing, being humble and being willing to learn, and knowing that there's always things out there which we don't know. And especially in this field, right? Because I really do think the markets are the most brutal and honest form of just everything, of information, right? It's extremely brutal. You're dealing with all different sorts of participants. But like you said, returns are king, and if you can generate a good return, then you're going to be motivated to keep going. So thank you so much, Vivek. That was an amazing interview. I'm sure our listeners are going to like it a lot, and I'm sure we'll talk very soon.
Thanks a lot, Raghu. Thanks for having me on the show, and good luck with everything you're doing at Rain Fund and the podcast. Thanks a lot.
Cheers.
Cheers. Bye. See you.